You've got the equity markets which are looking a little quiet in today's session, and rightly so, given that you've got a tepid global backdrop, a weak currency and monsoon that is below average. It's 51.19 for the Nifty, which is threatening to go into the red terrain, and 16,892 for the Sensex. It's pretty much an even Steven when it comes to the market breadth, though it's marginally in favor of the gaining side. And the broader markets aren't doing too much either. The mid-cap index is high by 0.3%, very quiet for the small-cap index. On the gaining side, it's the oil and gas basket which is holding up very smartly. So GAIL and ONGC feature on the gaining list. You've also got a Tata Power and Reliance Power which are doing fairly well for themselves. And TCS, as well as some of the select banks like an HDFC Bank or Kotak Mahindra Bank, are holding up in today's session. Cipla, Grasim and Ambuja, after last week's CCI report, are also in the limelight on the upside. Unilever, HCL Technologies and SAIL are some of the big losers. Add to that a Tata Steel and Sterlite Industries.
All right, a quick look at the currency markets and the fixed income markets as well. Yesterday you had that announcement come from the Finance Ministry and the Reserve Bank of India. Much against what the market was expecting, you saw a very, at best, what can be described as a half-hearted attempt to get the rupee back on track. All that you saw was an increase in the FI investment limit in government securities being raised from $15 to $20 billion. The corporate bond limit was kept intact at $20 billion, and as against an expectation that the infrastructure bond investment limit for FIs would be increased, you didn't see anything on that front. Also, a broad expectation that there would be something on the lines of a resurgent India bond or an India Millennium Deposit. That too didn't come through. What you saw instead was the rupee, which gained before the announcement came to as high as 56.40 to the dollar, give up all those gains and slide below 57. And as we speak today, it is sitting well below 57 at 57.06 to the US dollar, quite likely to stay at those levels in the absence of any positive cues coming its way. In the fixed income markets, what you are seeing is some amount of pressure on the 10-year bond. The new 10-year bond is trading at about 8.08%, slightly higher than the earlier level of 8.05%. The old 10-year bond, of course, trading at about 8.44%. Now, the liquidity deficit in the system is continuing to run at about 100,000 crores. The expectation is that by the end of the month and going into early next week, that level should come off as you see spending, and this has actually gone up, the deficit, because of advanced tax outflows from the system. On Friday, you are going to see another tranche of bonds being sold by the Reserve Bank of India on behalf of the government. There is one tranche of the new 10-year bond being sold as well, the 2022 bond, and also a new 5-year bond for 4,000 crores that will be sold. So in all, 15,000 crores to be raised by the RBI for the government on Friday.